Thanks, guys, for coming on out. Christopher Friedel here with the Texas Blockchain Council, and we put it on the summit here. We've got Jay. I'll let you guys go down the line and introduce yourselves, what your specialty is, and then we'll kind of outline the topic.
Jay Sabato with Satoshi Mining. I'm the CEO of Satoshi Mining. My specialty is optimizing energy assets.
My name is Ryan Knuckles. I'm the co-founder of Crypto Power and Digital Infrastructure Group. Crypto Power is the first power provider in North America designed to power the blockchain. Digital Infrastructure Group is a development company that essentially site develops, builds out sites for our crypto clients.
My name is Brandon Martin, and I'm an attorney with Martin Legal Group in Dallas. We represent clients in the Bitcoin mining space and on the oil and gas side. So we're kind of the mixture of energy and Bitcoin mining, and merge it all together and help clients swim in both worlds.
My name is Adam Mortoff. I'm the business development manager for Upstream Data. We build infrastructure for anybody, oil and gas producers that are looking to leverage mining to bring their stranded hydrocarbons to market, as well as, Bitcoin miners that are making joint ventures with oil and gas producers. We help them from start to finish.
Thanks, guys. Yeah, we wanted to put this panel together and use it as a live deal and start. I think, Jay, you guys started with the TBC. I came on board. We've helped as an organization try to pull everyone together to get the resources, to start from zero and then get in mind going. So if we kind of run through the journey that you started out, starting with, just doing some hosting with another company, and then, where we're going right now and how you've used each of the members here.
Yeah, absolutely, Chris. So I've been in Bitcoin mining since 2017, mostly getting hosted outside of the US. But in 2020, 2021, I joined TBC, met a lot of great individuals, met some LPs, decided that I wanted to start my own hosting facility. And so partner with an operating team and went and raised some capital, and getting the resources from TBC was really critical in understanding how to structure the capital raise, and partnering with vendors, partnering with energy producers to get our hash rate online.
Now, when you were looking for, did you start with the capital? Did you start with looking for energy sites? How did you start out your journey?
Yeah, so I actually started with mining assets. I had some assets that I had liquidated, and then I purchased some new gen equipment. And so I needed a place to co-locate them. And in reality, it was really difficult for me to find a co-location partner that made sense with those ASICs. And so that's when I decided to start looking for sites. And that's kind of how Satoshi Mining came to be, because we wanted to structure a co-location offering, not just for my own personal assets, but a co-location offering that can be competitive in the space.
Now, did you know, when you started that journey, did you already know the energy space? Did you already know kind of the legal that you needed to navigate it? How did you start from 0 to 1? How did you come across Crypto Power and start working with them?
Yeah, so my background is on the energy side. I ran a crude logistics firms that did energy marketing, getting lacked to refinery. And so my background was basically a operating partner. So I knew how to run a business from 1 to 5. And so Satoshi Mining has gone from 0 to 1. And in order to do that, I needed to partner with specific firms that understood the space, understood the industry, and we really relied on our connections through TBC to introduce us to different partners that are already operating in the space, either from a legal perspective or already deploying capital in this space, so that we can get their perspective on how they're operating specifically in this industry and how we can structure our offering. So through that, we met our capital partners here, and we decided to do a syndication deal. And so we raised some capital under that model.
And are you guys currently raising? Are you currently, is that closed out? Is it active? What's the status of that deal right now?
Yeah, so we fully funded our first site. We closed our round back in September. And so we've seen progress accelerate dramatically within the last few months. And so we're going to be starting our new fundraise very, very soon.
The price of Bitcoin going up helps that a little bit, right?
Absolutely.
Increase some of the interest. Ryan, as you're helping companies find energy and you're helping them navigate, what are some of the things that you see companies needing to learn as they enter that space, as they're starting out?
Great question, Chris. The simplest way that I like to tell people is you really have to develop a roadmap, for your development, right? From permit to power flow. The stages of development are so integral in how you literally put it all together, from site development to construction to legal to infrastructure solutions, a good operating team, right? And literally, as you kind of bring it all together, that final nugget, as that facility is constructed, ready to go, flow power infrastructure is there, is securing your PPA, right? And as a power provider, we physically supply electricity through the grid. You would be amazed about the amount of miners that they might be really technology driven, right? They might be very energy focused, but very few people really have a strong understanding of how to really maximize your energy portfolio and your position. Satoki Shaikh, one of the co-founders here, he has a strong background in power trading. There's a few groups out there that do have that competitive edge, but as a power provider, we not only supply electricity, but we really teach you how to optimize, your energy position, right? So supplying electricity to the people is, obviously one of our main businesses. We're obviously now a demand response provider. And so the energy arbitrage game, obviously, here in Texas is just absolutely massive. So, if you would have had 10 megawatts online during Winter Storm Uri, you would have cleared about $20 million in 72 hours. So the load response program right now in ERCOT's paying about $70,000 to $80,000 a megawatt. We just launched a new demand response program called ECRS. That one's flowing at about $265,000 a megawatt hour. So the extra games that you can play with your energy position, in my personal opinion, where this industry is going is Bitcoin miners are really becoming digital energy companies, and Bitcoin is just simply the tool to go play the energy arbitrage game, and we help them play that as an energy provider.
So you really have an intersection of energy. You've got the capital markets, you've got Bitcoin mining, and you've got the legal. You've got to manage the supply chain for getting things online right now. On those PPAs that you're seeing currently, have you seen the market evolve over the past 6, 12, 18 months with how long those PPAs are getting struck for, and then how they're hedging those positions?
So every ISO has a different cost structure, right? So here in the ERCOT market, right, we're an energy market. We don't pay subsidies for generation just to sit there and be idle. As a power supplier, I personally love that because that is an extra cost that gets passed down to consumers. Okay, in terms of the creativity of how you can buy electricity, if you're a startup company with little credit history, you're kind of a little bit, not going to say locked down, but your level of creativity is a little bit, diminished what you can do. If you're, I would say, relatively new miner with some credit history, you kind of begin to step up in the levels of how much power, how you can be creative in the wholesale power market. But what we really do at Crypto Power, to give you an example, large energy companies like Chevron, for instance, they don't go to energy brokers. They don't go to power providers like me to procure electricity. They basically are their own in-house power provider, and they buy direct in the wholesale market. And basically, as you kind of rise up in the credit game with us, and as we kind of build your credit history as your power provider, we essentially just kind of become your in-house power team, and you kind of become your own energy provider. And we basically give that structure to the industry to essentially be your own power provider and have wholesale electricity access.
When you're doing that, when as you're raising the company up through the capital markets, is there something that a company can have, they can bring to the table in the form of a GP or an LP that strengthens that position? And if so, what is that?
The biggest thing that you can do, right, if you have a, let's say Satoki went out and got a large private equity company to back them, right, and they are willing to underwrite some energy purchases, right? That's a way to kind of get creative on collateral, so they're not having to put up huge deposits for energy. We use Synoda with some of our customers. Synoda basically created a payment platform that uses the Lightning Network to settle energy payments on the 15-minute node. So as a power provider, we have a lot of counterparty risk of extending, credit to people, right? Because we own the power. If you don't pay your power bill, we got to pay that bill. So, using creative technology to de-risk the energy process, to make these deposits a lot easy to obtain is super competitive. So as an energy provider, we really tried to look for creative ways to not only, decrease risk for our consumers, but obviously decrease risk on our side, because that allows us to be more creative and offer more competitive electricity.
Now, as the with the rise in interest rates, have you seen the amount of capital that's needed for a deal increase?
With our new kind of payment structure that we use with Sonoda and some other kind of direct billing options that we have, we've actually, seen kind of decreases on the upfront collateral. And as far as the PPA kind of cost basis, ERCOT is in a backwardated power market. What that means is we have such a gluttony of renewable energy coming online where, on the longer strip, power prices actually get cheaper. And so what I like to tell people, the worst time to possibly come online with a Bitcoin mine in Texas is the middle of the summer, right? Because you're buying heat inflated pricing with your energy. So the best time to turn a Bitcoin mine on are the shoulder season months of natural gas season, right? So you have March, April, a little bit of May, and you kind of come into October, November. So right now, this time of the year is the absolute best time to get started on a project because, about 4.5 months to get a project online, which would basically, get you about March, April, and you're basically setting yourself up to, what I like to tell people, it's very important to be a market picker, not a market taker, right? And so if you're positioning yourself in a wrong time of the year, you're obviously going to take inflated power pricing, and you always want to put yourself in good times of the year in good price positions.
Gotcha. Now, Brandon, your firm has helped, several companies navigate some of the legal issues that are around, both on the power procurement side, managing leases. Can you talk a little bit about some of the challenges that you see and what you guys help, you've helped Satoki navigate that? What are some of those challenges that you've run through?
Yeah, I think much like the power procurement side, we're starting at, you said permitting. For us, it's the initial land. Like, we have to have a place to operate. Our clients have to have a place to operate. So we're starting at the cradle. Do we have title to this property? Are we able to go operate out there? What kind of agreements do we need to be able to operate out there? Do we need a surface use agreement or a lease, or do we just need to buy the property? So we start there, and then we begin to work through the process of building out. So you have infrastructure that has to go onto that property. You're going to eventually get to the point where we're talking to guys like Crypto Power and negotiating agreements. And then finally, deployment. And once you get there, you have a whole range of agreements from, hosting agreements to, operating agreements with other partners. I mean, it's a range of potential ways that you could set up your site. So what we try to do is just advise clients on what they need on the legal side to accomplish the goal they're looking to accomplish. And, those vary across the board. They really do. But ultimately, they all have a singular goal, which is to be hashing. So that's what we're trying to get to every time.
You say they're kind of all over the place.
Yeah.
Have you found a blueprint? Have you found something that's a rough model that you then can, modify a little bit?
Yeah.
That's taken over in the industry?
Yeah. So certain aspects, yes. So our clients are going to form in the way that they have worked through that with their partners. So that's going to be very unique and client specific in how they want to group investors and get the deal off the ground. As we move further into the process, like hosting agreements, up until 3 years ago, let's call it, really was kind of make it up as you go, because no one was doing it in an often enough way that we had any kind of similarities between agreements. What we've been able to do over time is really kind of narrow that band and try to create a model for what we think the kind of uniform agreement should be, and then we're able to change the commercial terms based on the terms of the specific deal we're working on.
So create a bespoke model, have a platform foundation for it, kind of get everybody up to speed on the capital side, and then add on the nuances for that particular deal depending upon the capital or the objective that's right. being shot up.
Yeah, and it's challenging on the front end, but now we're beginning to see the whole industry professionalize, and that's what we're trying to do on the legal side as well. Just instead of reacting to fires every time, we want to have a set way that we do things, and as much as possible, let's stick with that way and then deviate where necessary to meet client specific goals.
It's a little bit of the Wild West, right? So people are figuring it out, and they don't have those systems in place.
Right.
Everybody has their idea for what they want to do.
Yeah.
But they believe they're unique proposition is, their competitive advantages in the space.
Yeah, certainly.
Now, you guys, Jay, you guys started off with the idea of buying first, and then you transitioned over to, you looked at some other options. What went through that decision process?
Yeah, so we looked at buying sites that are already operational, but given the current market, there was a large premium associated with that. Also, we wanted the flexibility, right, to engage partners like everybody on stage, Crypto Power, in our own procurement process as well. And some of those sites are tied up already with the PPA that specifies who you have to use for power, both on the REP side and also on the demand response. And so that's why we decided to actually go with a greenfield site and build it up from the ground up, because not only could we get more flexibility, but we can build a standard and a template so that we can get access to scale in the space, right? So once we build our first 5 megawatts, replicating that is going to be a much more effective if we start from the ground up, as opposed to plugging in and playing, ASICs. Essentially, that's really what our vision has been.
And you guys have evolved as you started this process, right? So you're going to buy, then you start with the greenfield site, and then you've looked at your hosting is the current model for it. Did you navigate? What went through the decision process for navigating between hosting versus mining specifically? What was your decision there?
Yeah, so that's a little bit on the art of the deal and capital allocation, right? So for our hosting entity, essentially, we structured under a qualified opportunity zone business. The site that we procured and we locked down under contract was within an opportunity zone, and so there's certain restrictions on intangible assets like holding Bitcoin on the balance sheet of those businesses. And so that's specifically why we went with the hosting model. Also, when we started our capital raise, we were right smack dab in the middle of the bear market. Bitcoin at 16,000. It's at 37,000 now. And so the appetite for deploying capital in ASICs was severely diminished with the ASIC back lending market collapse that happened just previously. And so it was much easier for us to engage potential capital partners with the idea of investing in infrastructure, right? Electrical infrastructure, and then using Bitcoin mining as a base load to optimize those assets, optimize those electrons coming off of those power poles.
Now, do you see you've got a few more sites that are coming down the pipeline that you're looking at? Do you see a model where you would separate those out, where you'd have an SPV that's specifically mining, another one that's specifically hosting, or merge the two of those?
Absolutely. So we structured our first fundraise around an SPV, right, for the hosting entity. We have a mining entity as well. But in the future, we plan on deploying and allocating capital within the energy space and using Bitcoin mining as a tool. And so there's going to be different deals that can be had, whether it's from a greenfield site, a behind the meter approach, stranded gas, like some of the miners that are doing right now. The SPV structure is very flexible in that regard. But given my background in the private equity markets, it's really critical for us to have operational control and basically help navigate all those SPVs and help navigate the capital partners that may want to allocate just in hosting, may want to allocate just in infrastructure, because they might be underwriting it at a different level as well.
You're going to have some Bitcoin maxis that are somebody that really appreciates the asset class, so they want specifically Bitcoin mining. So I could see that being, there's different capital has different needs and different desires. So Adam, we've kind of left you out here. You're kind of.
I'm enjoying it. No, it's great. It's great hearing from you guys. I really liked what you said about, Bitcoin being the tool, in the project, right? Not necessarily the focal point or the centerpiece. And I think that's really where Bitcoin becomes insidious, right? Like, there's many processes. I was talking last night with some guys about, every industrial process that requires large amounts of warm, dry air, right? Boat storage, lumber storage, all these kind of places, HVAC. There's plenty of room for a Bitcoin, tangential Bitcoin focus, where Bitcoin is kind of the tether that gives you that competitive advantage on the project. And I think you guys are wise to take that avenue, right? Where maybe you focus more on the electrical infrastructure and focus more on kind of an ancillary process. But Bitcoin is still, it's the spark that's making the investment exciting, right? And it's the part of it that's new, part of it that you're doing differently than anybody else participating in the space. That's where I think the most exciting kind of action is, the most exciting projects in the building is. So I'm happy to listen as well as participate. This is a good talk.
No, absolutely. I mean, you guys went with upstream data on your containers and some of the infrastructure side. What went into that decision? You were looking at air cooling, you were looking at immersion, you were looking at some different options. What went through what went through your mind when you were making that decision?
Yeah, absolutely. So I first met Adam and Steve in 2021. So that was a big factor. They've been operating in the space for a long time. They're a proven provider.
I think Steve describes Adam as one of the preeminent people in the space.
One of the first people to be yelling at the sky about mining in the oil field early on. Yeah,
right.
So their proven track record was something that was very attractive to us when we're deploying capital in container assets. But also our site is located in West Texas, in the middle of the desert, with not a lot of infrastructure already there. And so typically, operating, call it, immersion mining containers where you need access to a large amount of high quality water, it's not really an option out there sometimes. And so we specifically were looking at deploying capital in air-cooled containers, and Upstream has one of the best products on the market. And we've done a lot of due diligence on that aspect. And so we're happy to partner with them.
Now, are they actually the best in this business, or
actually
the best?
No, but I mean, I think it's an important process, right? Working with any supplier. What we do at Upstream Data, something I do with customers often. I mean, I've got a call later today. Is really just get obsessive about the numbers, right? I mean, get obsessive about all the nuanced details, from upfront capital per kilowatt or upfront capital per megawatt, to every kind of projection that you can plan out, right? There's plenty of stuff that's going to happen that you can't plan for, but that which you can control, so that everyone's on the same page. And then from there, Bitcoin mining ought to be really easy. Right, it ought to be very passive, very autonomous. You respond when needed, but ultimately it's happening, right? It's an autonomous energy consumption market, and that's what it does best. It consumes power. The planning part, I often talk with customers, the more due diligence, the more work and obsession you can put on the upfront side, it's going to make your life so much easier, right? And I think that's what we do at Upstream Data really well is, we look forward to those obsessive details, because they just make the whole project so much more successful, so much easier to operate. And then typically customers come back and, have us build a lot more buildings for them because, the previous 5 megawatt or proof of concept went well. We maybe overanalyzed or overly obsessed over some of the details, but that was the time to do it. And then you're off and running, right? And then the capital raises become easier, and every decision just leads off on that, right?
Where do you feel, I mean, this applies for each one of you, where do you feel that developers maybe make a decision that's a low time preference because it's easy, that has a longer term consequences, maybe 2 to 5 years down the road, that they look up and they say, oh wow, that solved my problem in the short term, but it made this larger problem in the long term? Where do each of you see that, both on the legal side, the energy side, and then the infrastructure side?
I'll say that for me, it's the conviction of the decision and the timing is where I see the most pain. And what I mean by that is, oftentimes a project, all the details have been aggregated and they're clear, but there's something they're maybe just not excited enough about it to really pull that trigger. And then they come make a delayed decision, maybe trying to correct for, crap, I should have pulled the trigger 2 months ago, right? Bitcoin price is a big part of this, right? Is how people buy high and sell low, is that emotional roller coaster of Bitcoin's volatility is a big part. And so I'd say, when I'm working with customers, I'm often, we're talking about longer time horizons, and I'm saying, live in a place of what you can control. Maybe focus some thresholds, right? And say, we want to be off and running before Bitcoin is at a X price or something like that, or X time. But, lay out some plans for yourself and stick to that, right? Don't wake up in the morning, check the Bitcoin price, panic, and go make stupid, 10-year decisions. Take that with a much, lower breath. And then typically the number one thing is preventing you from overcapitalizing, right? Do not overspend on the upfront. If you can prevent yourself from overcapitalizing, you'll be in good shape, right? Or at least be in a better position, have a low risk of a total loss or total risk, right?
Yeah. So the one where I see it most often is actually in the off-grid context. So I will speak to that real quick. I have a lot of clients who they'll hunt down a natural gas asset, and they want to close that deal as quick as they can. And so they may be willing to take shortcuts to get that deal closed. Sometimes a gas purchase agreement is not best done on one page, right?
Right.
And so what we try to do is just explain to our clients, hey, there is a reason why we need to really think through the details here and not leave gaps, because your gas is your power. And if you are creating shortcuts on your gas, you may find that there are some gaps in that agreement that adversely affect you in the future. And then I would also say it's kind of the same thing on the land side as well. You find a landowner that's ready to pull the trigger. They send their form of agreement over, and they say, take it or leave it. And we always encourage clients, hey, be very careful. Once you enter into this, you're stuck. So spend some time and make sure this meets your requirements for what you're looking to accomplish at this site, and don't rush into it. So I would say those are the two that we see it most often, and those are right at the beginning of the project. So if you make a misstep right at the beginning, it will only lead to bad decisions.
Yeah. Doomed from the get-go.
Yeah, you have a series of bad decisions that you'll make after that. Yeah.
Now, Ryan, where do you see this?
In terms of pain points on the energy kind of supply side of things, and even infrastructure, on the supply side, what a lot of people don't really understand about procuring energy is it is your biggest ongoing liability in your business. And so the ongoing management of that energy liability, it can also obviously turn into an asset like we talked about, maximizing your energy position. But that is where a lot of Bitcoin miners are realizing, like, wow, we've really got to master energy, because that is obviously our biggest expense, but now it's becoming one of our profit centers. And so, as a power provider, obviously I can sit here and educate and tell you, hey, a 4CP month, or hey, we need to be, managing congestion, but it's your job, the consumer, to be making these educated decisions, right? And so really just kind of getting around that learning curve as fast as you can, and really empowering yourself with good partnerships like Jay has been talking about, and working with really credible people that know what they're talking about is really just half the battle. And I think one thing we've all really talked about on this panel is you have to build a roadmap, a business plan that is the holy grail. It's going to change, right? Things change all the time, but you literally have to line out every single step to literally reduce as many liabilities as you possibly can and maximize your profits.
It's really your roadmap and your team that you're putting together, and you've put together, the A team over here that's to help you through it. Now, when do you anticipate your site coming online here, Jay?
So our site's going to be online in Q1 of 2024. We'd love to get it online next month in December, but there is a lot of nuance, right, to getting a greenfield site online. So our anticipation is we'll be live in Q1.
Yeah, but then we got to wait for the supply chain. There's, as the price goes up, there's a lot of demand right now for containers, a lot of demand to build things out. So you have to get in line and make sure that it gets done in a proper, get it done quickly, because time does kill these deals. Time is very expensive if you have 5-10 megawatts and it delays out 30 days, 60 days, 90 days.
Time is blocks. I mean, There's only so many where we have 170,000 left until we're still within the first million blocks of Bitcoin, right? I mean, it's the first inning. It might feel late, but it's early.
Yeah, it looks, I think especially in this is when you guys look at each one of you, there are, hold this up, but there are cheaper alternatives in each of your fields, but cheaper is not necessarily less expensive in the long run. So if you make a decision that happens right now, like you said, you do a one-page agreement, you avoid the legal fees, and now you spend the next 8 years battling it out with the landowner, or you get into a cheap deal and you're suddenly having to send guys out to plug holes in containers and the locations and power agreements, all of that. So we appreciate you guys coming out today. and running through it. Jay, wish you the best on this site coming along. We look forward to like the final, seeing how everything plays out.
Go Satoki.
Yeah, thanks, Chris.
Satoki, thanks everybody.
Hey guys, thanks for coming out to the 2023 North American Blockchain Summit. It was the best summit yet. We look forward to hosting you again next year. If you enjoyed the summit or like what you saw in this video, be sure to subscribe. If you're interested in learning more about membership in the TBC, go to texasblockchaincouncil.org to learn more.